Tuesday's market closes higher in livestock, lower in the grains. Kent Beadle joins us with CHS Hedging. And Kent, let's talk about the grain trade pulling back today. And a lot of that was a function of spillover risk off from these outside markets, wasn't it?
Yeah, it was definitely a risk-off day led by the crude oil. Crude oil didn't like the rumors about a possible Iranian agreement with the United States that could possibly allow for more Iranian barrels to be on the world marketplace. Sanctions could be lifted upon that agreement, and so we were down sharply in crude oil and in the products. And I think that pulled down on both corn and beans. Corn because of the impact on ethanol, and obviously beans is now we have a huge impact on renewable diesel. And we saw the soybean oil down hard today, and so that pulled down on the beans initially as well.
Corn got up into an area where we maybe had some chart resistance and maybe saw a little pickup in hedge pressure too.
Yeah, what I think we saw was some resistance against that 682. That was an old low from back in early July, one of the reaction lows that we had before we eventually broke down a lot further. We also had the 100-day moving average was sitting up above the market. It was really the only major moving average that we haven't yet been able to climb and settle above. But those acted as resistance points. And I do think we had some hedge selling from the country that probably helped us a little bit lower today as well.
Yeah, we've had a good run here in the corn market trying to price in the lower yield from Pro Farmer, but we've got most of that priced in here now, so we're going to need some new news, aren't we?
Yeah, and I don't think we're going to get a lot of new news between now and that crop report. So what's more likely to happen is that we're going to establish some sort of a trading range, probably up against that 682 to 685 area on the high side, probably finding some good support. Oh, let's just say 660 to 670 on the low side. We'll trade this range here until we get some real numbers from the USDA, which are going to be important because they're going to be our first numbers that have objective yield data associated with them.
Absolutely, we're waiting for that. What about the wheat market, though? Corrective action because of a higher day yesterday, but we also have spring wheat harvest progressing, and yields have been pretty good, haven't they?
They've been pretty good to really good. Okay. Now you're not universally into wheat harvest in all parts of North Dakota and Minnesota, but we've been seeing results that have just been really solid, 50s and 60s in the western part of North Dakota, 60s to 80s and maybe even higher in some parts of the Red River Valley. It's been a very good year for wheat. We're still worried about and struggling about on corn and soybeans in that area because of delayed planting, but the wheat is definitely doing good. It liked the moisture. It liked frankly, it liked the heat that we had through a good portion of the summer. That was helpful. And it's been a real good wheat yield, along with a good wheat yield, by the way, in Canada, which we saw yesterday on the Canadian production report as well.
Yeah, Stats Canada actually came in a little bit bigger than expected. What about the soybean market? Do you see much more downside? Because we've had a pretty good correction off of last week's highs already.
Yeah, and if you look at the way we traded today, you saw that we pushed down against that $14 a bushel area,
right,
and we held, and we settled our market, well over 20 cents off of those lows. I thought that was a strong performance. The meal, which was down hard early in the session, came back into the close. The oil came back a little bit as well. Crush margins are still huge. We still have a decent amount of export business, and I do think that there's still going to be good, solid daily export sales announcements when we do have breaks like the one we had yesterday. We saw a couple 100,000 tons announced to unknown again. And while we don't know when we're going to get a real export sales report anytime soon, on a weekly basis, these daily reports are going to keep coming in. And we think that we're going to be well supported in the beans on breaks.
Yeah, $14 seems to hold us where we get good end user buying, to your point. All right, so the cattle market, just the pullback in corn, or have we found some support areas on the charts that we can kind of build on again?
Well, chart support for sure, but I also think that, being led by the feeder cattle, the feeder cattle have struggled with this big rally that we had last week in the corn. The correction in the corn certainly helped that market steady itself a little bit. I thought that we, you know, got to an area yesterday where we found support, closed off of those lows. I thought it was a pretty good setup for a rally today, especially with the lower corn market.
Absolutely. And the hogs, second day up here, and let's talk about, are we at a point where the discount got wide enough that we're going to hold now here those lows?
Well, I'll tell you what, we got to a point where the discount was so egregious, so to speak. It was extreme, and I think
Yeah.
that allowed for a correction of the break. My gut is that we're probably going to take another run at some of those lows in the hogs, especially that October contract that's still got a gap on the chart down in that $88 area. My gut is we're going to go down and fill that. Probably because I think the cash market, which is coming down on now about a couple bucks a day, is probably going to drop far enough to be able to allow us to challenge that gap at least sometime between now and expiration of that contract.
All right, we'll see if the funds chase that gap area. Thanks so much for joining us. That's Kent Beadle with CHS Hedging.